Hey everybody, welcome back. It is Tuesday, March 10th. Let's get right into the news. Markets just recently wrapped up, and today was definitely a study in how rumors, contradictions, and deleted tweets can move trillion-dollar markets, while stocks themselves barely budged an inch. The headlines of the day belong to oil. WTI crude cratered nearly 12%, settling in at $83.45 a barrel. Brent dropped just as hard, closing near $87.80 a barrel. That is an enormous move in a single session, but if you were watching intraday, it was even more wild. At one point, crude was down more than 16%, briefly touching $77 a barrel, before bouncing off the lows and fighting its way back. What triggered it? A tweet. Energy Secretary Chris Wright posted that the U.S. Navy had successfully escorted an oil tanker through the Strait of Hormuz. Oil traders panicked and dumped. Then the White House deleted it. Caroline Leavitt stepped to the podium and said flat out, "That never happened." And just like that, crude bounced back from its lows, closing off the worst levels of the session. So that's pretty interesting, right? Chris Wright posts that the Navy had successfully escorted an oil tanker, and then Caroline Leavitt just says that never even happened. Very curious. So at best, it kind of looks like certain people who should be talking to each other have no idea what the other one is doing. And at worst, it sounds like somebody could have potentially made a hell of a lot of money on that tweet. I would like to know if anybody in Chris Wright's orbit made any big trades on oil today. But that's a whole nother video. Basically, this is the market that we're trading right now. One tweet and you can get a 16% intraday swing. Now here's the paradox. Oil had one of its worst sessions in recent memory, and yet stocks ended the day essentially flat. The S&P 500 closed at 6,781, down just 0.2%. The Dow shed 34 points. The Nasdaq was virtually unchanged. The market wanted to rally on cheaper oil, and it just couldn't. And this tells you something. Investors are not yet convinced that this relief is real. Defense Secretary Hegseth stepped up at the Pentagon and made it clear this war doesn't end until Iran is, quote, totally and decisively defeated. What does that mean exactly? Who knows? But that's what he said, and that put a ceiling on optimism. The one bright spot in tech was chips. TSMC just reported a 30% jump in revenue for the first 2 months of the year, and that gave cover to NVIDIA, AMD, and the broader semiconductor complex to hold up on a day when everything else was struggling. HPE had its own moment. Shares jumped roughly 3% after beating earnings and raising its full-year adjusted EPS forecast. At least somebody had good news. Now, the most important story of this evening is happening right now after hours. Oracle just reported Q3 earnings, and the stock is up 7%. This matters because Oracle was sitting 54% below its September highs, down 22% year to date, and carrying over $100 billion in debt and grinding through a major restructuring. The market needed proof that cloud demand and AI spending were actually translating into revenue, and tonight it actually got some. So right now, all eyes are on Thursday's IEA emergency meeting, any new signs out of the Strait of Hormuz, and NVIDIA's GTC conference, which kicks off on March 16th. So that's it for today. This market does not reward passive traders, and it doesn't mess around when it comes to wild swings. As you saw today, who knows what can happen when a single tweet comes from higher up places. So anything can happen. I'll see you back here tomorrow afternoon. Take care, everybody.